Okay, guys, welcome back to lesson 11 of learning to day trade with Tony. I am, of course, I'm Tony. If you are getting a lot out of this course and you feel like you would like to act as a reference or provide a testimonial, I would be greatly appreciative of that. So feel free to contact me if that's the case. A good deed goes a long way. In today's lesson, I'm going to go over. I've mentioned a couple of the more advanced technical indicators in previous lessons, but I probably just brushed over them rather than actually going into any detail. So in today's lesson, we're actually going to go over more detail on some of the more technical indicators that I use. Now, I don't use them all the time, if I'm being completely honest. Um, I do tend to keep my charts as relatively clear. I suppose what I'm saying is, in the main, um, I don't have. Um, I'm not a big fan of technical indicators. Okay, uh, as a whole. Um, that being said, I do see their uses. Now, I know a lot of traders really get excited about certain technical indicators, and the reason I think is well, it's pretty simple. I think there's this misconception that maybe there's the perfect combination of indicators that's going to give you, 85% win rate or something. Or maybe there's even a technical indicator that's going to have the magic formula and be 95% right. And realistically, I mean, come on, it just doesn't exist. When I first started trading, I tried, tried as hard as I could to find the holy grail of technical indicators. I've learned the various methods, so the moving average crossovers, the using Bollinger Bands, RSI, MACD, and I'm providing little mini tutorials on doing those. But whether it was a single indicator or a combination of indicators, what I always realized I was doing was really get myself off track, and it wasn't a good way for me to be spending my time because I wasn't getting better at recognizing patterns. You know, there's a lot of education you can go through with day trading and investing and swing trading and all the other things that we can loosely bring together. Um, but a lot of it is literally a waste of your time. Okay, so trying to if you're getting into the forex market, the forex community tends to put a lot of emphasis on technical indicators. The crypto space, more swing and long term, puts quite a bit of emphasis on technical indicators. Um, but pattern recognition for me is the single biggest asset you're going to have to your repertoire. So that for me, if you're getting better at recognizing the patterns, reading volume, reading level two, even, I think that's more important. Okay, rather than just getting caught up in all trying to find correlations between price action and technical indicators that you know may work for a short period of time and then just totally don't work. Okay. Um, Back testing, those kind of things doesn't help either. It's a lot of time that you put into it. So you're the majority of people that are on this course today are you're early in your development as a trader. So it's important you keep your charts simple. Okay, don't confuse things. I don't You don't want to have a bunch of technical indicators that are going to be more confusing, that are going to give you, false positives where you think it's a good time to buy because this and that were green. And I just think it can really get you into some trouble. So generally speaking, I say throw away all your technical indicators and focus on the candlesticks, the chart patterns, your very basic indicators like moving averages. But with that said, there are a couple of more advanced technical indicators that I do use that can help give you context for the current price action. Okay, and they can help with specific strategies. So my feeling is that use technical analysis to confirm what you already suspect. So if you suspect the stock is extremely oversold, does the technical analysis confirm that? Does it confirm that? And if it does, then you know, okay, you've added that level of confirmation. It can give you a little bit more confidence, but you just want to make sure it's not false confidence. So that way you don't want to overdo it and have too many indicators. Okay, less is definitely more in day trading. So simple is really better. Okay, so with that said, let's start looking at some technical indicators. Okay, first up, let's talk about the Bollinger Bands. So I do use Bollinger Bands if I'm, trading reversals using the reversal strategies. Now, what are the Bollinger Bands? I guess is probably a good question. These are moving averages with a standard deviation, and I just use the very simple Bollinger Bands that are standard across all platforms. It's a 20 period moving average with a 2.0 standard deviation. Okay, so I'm not using a complex Bollinger Band formula. It's just the simple snap-on formula that you'll find in most charts. So Trading View, you've seen me using DAS Trader, but you can get it Sterling. Any platform should have the Bollinger Bands, and it's just a standard one. And what I use the Bollinger Bands for is to help me find stocks that are super extended, they're overextended, and to recognize that they are in fact due for a pullback. So if I look at this example here, and this is a bit messy because of all the indicators on there, but it will come to life. Okay, so the Bollinger Bands are on a chart. If we can see these here on this chart here, the Bollinger Band is the pink line on the top, and the pink one down at the bottom. You see how it sort of bubbles out. So the price action 99% of the time is going to occur within the Bollinger Bands. Okay. So a stock that's riding the top of the Bollinger Bands is very overextended. So if you're looking at this pink here, this is actually following it up. It's riding the top of the Bollinger Bands. It's right here, okay? This orange line is highlighting it, okay? It's riding the top of the Bollinger Bands, okay? So it's like think about the elastic band analogy we were talking about in previous lessons. This is really stretched stretched out to its max at the top of the Bollinger Bands, okay? Its median is its average point, and that's going to be down. That's going to be down here. Okay. So there's some people that will trade stocks in sideways markets that are just sort of bouncing off the Bollinger Bands, like I don't know, like a bowling ball down an alley with the rails up. It's just bouncing back and forward, and like that may work. I don't use that strategy. For me, what I do instead is I just look for a candle to close, or at least open, but ideally to close fully outside the Bollinger Bands. Okay, so for me, it's kind of like you have this strong momentum, this big surging volume shooting up, and then you have this final candle right here. If you can see that, this final candle right here that tops the it tops out, and so it's extended. It's overextended actually. It's outside the range of what was considered the typical price action. Okay, so candle outside the Bollinger Bands, and specifically the type of candle that we're going to want to see, the ideally what we're going to look at is dojis. Okay, so a doji candle is a candle that opens up and closes at pretty much the same price. So there's a green doji here and a red doji here. Okay, so it's where the open and close is pretty much at the same price, or very close to, within a couple of cents at least. Okay, so during the period that the candle went up or down, but then it closed right at the same price. Okay, so it started at this one. It started let's say 9.52, went up to 94.50. 76 or something, and then went back down to 94.52. So it's gone up or down, or both, but it's opened and closed at pretty much the same price. So, you know, also this candle here is a doji. This one's here is a doji. Um, this one here is a doji. Okay, uh, those are all dojis, right? And when we find a doji at the top of a trend, it's an indicator of some indecision. Okay, it's an indicator that the traders are not decided whether they're feeling bullish or bearish, right? And potentially a good indicator of a reversal. So what I look for is the candle outside the Bollinger Bands. I short it with my stop either at the high of that candle, or maybe just 20 cents away, and then I trail that stop as it comes back in. Okay, so this is just a simple Bollinger Bands on a chart. Um, that you know they do help because I just look at it, and I can see right away that it's either extended or it's not. So again, I don't need the Bollinger Bands if I see a stock is strong and has 5, 6, 7 green candles in a row and then a doji. I already recognize that as being extended, but the Bollinger Bands are just a very quick guide to tell me that, yeah, we're in this extended area, okay, or we're not. No. Okay, so here's another example on what's this stock, MHFI. Okay, so we shorted this one. We had candles shooting up the outside of the Bollinger Bands, a doji bar right at the top, and then we short that, and then we trail it with a trailing stop loss coming back in. Okay, so we start inside the top Bollinger Band, and then as we break that, we're above the Bollinger Band, then we get this doji. That's when we get that doji, that's when we short it. So as the new candle starts to form, we short it there. We've got stop loss at the top, and then we put a trailing stop at the high of day, and then we ride the move down, ride the sell off. Okay, now this one would have it's made a move almost to the lower Bollinger Band. Okay, so this is the lower Bollinger Band here. Okay, so it's made a move almost all the way down to the low of the range, of the Bollinger range. Okay, so when you put the Bollinger Bands on your chart, you have 3 lines. You have the middle line, the top line, and the lower line. And on this chart, I'm not showing the middle line, so I'm only showing the top and the lower, because that, to me, they're the ones that are relevant. Those are the ones that are important to me. Okay. Now, next example. Okay. Here's another example of the Bollinger Bands. Right. I don't use them on the 1 minute chart. I only use Bollinger Bands on the 5 minute chart. For me, I believe it works best on the 5 minute chart. So if you're having a relatively quiet day trading momentum stocks or things on the 1 minute, so we're not getting that kind of volume on the 1 minute chart, then Bollinger Bands aren't really going to help you a lot of the time. So I look for the patterns and I look for the 1 minute, the five, use them on the 5 minute chart. Okay. Um, and I only use them on the 5 minute charts. Okay, so in this one we have uh, one, two, three. We have four green candles. Uh, the fourth one, you can see that this is almost a doji. Okay, so the fourth one is a doji. So we've got four green candles, but the fourth one is close to being a doji because it moves up to 77.19, and then it pulls back all the way to 76.52, I think it is. So it's a small body basically. It's opened and closed at almost the same price. So shorting there, and we put the trailing stop uh, on as we come in. Okay, as it starts to come down, as it starts to come in, and then we just wait for it to get stopped out. Okay, so very simple. When you see a candle outside the Bollinger Bands, that tells you. So these are on the way up. The three that they actually start. They open on either below or on the Bollinger Band. But this one, it opens and closes above the Bollinger Band. Okay, and that tells you that the stock is really extended. Now look, you've got two candles here, as I say. Um, they're closing outside the Bollinger Bands, but they're opening inside the bands. So that doesn't mean that we enter a trade again. We use this as confirmation that the stock is indeed overextended. Okay. And we look for additional pieces of information to help us time our entry. So in this case, um, we're going to start, we're looking for a doji bar, a doji candle. Okay. This is what we're looking for here, is this doji here. Okay. That's our entry indicator. Right. Now, Bollinger Bands, they're very simple. You can see this chart here. It's it's a little bit messy, but it does have a more. I've got to be honest, it does have more on it than it maybe I normally put on there. But TradingView allows you to reduce the opacity of certain trend lines. So you could turn the Bollinger Bands down like 50 opacity so that they're not quite as noticeable. They're kind of tucked in the background. Um, you know, the moving averages here that we've got moving averages here. So we've got the just to explain what's actually on here. So we've got the Bollinger lines. This is the upper Bollinger line, the lower Bollinger line. Okay, we've got the volume weighted average price here. Okay. And then we've got the moving averages. So we've got the moving average here and moving average here, and this is the 200 moving average here. Okay, so that's what's we've got on here. We've got three moving averages. We've got the Bollinger Bands, and we've got the volume weighted average price. We've got the MACD and the down here as well. So the moving averages. They can be really helpful. The volume weighted average price is fairly helpful. And then there's this, it's good to know because it gives you an indication. You can actually read some information on this, but just remember that a lot of these indicators are lagging indicators. The moving averages are all lagging indicators. The VWAP is a lagging indicator. They're all lagging indicators. They're based on what's actually happened. They're waiting for a new candle to close so it can form its next point. Okay, so the second technical indicator that I use from time to time, and again, I use it more with um, in relation to when I'm trying to find reversals. When I get alerts around top of high of day or low of day alerts from the signals, from the Benzinga signals, is the relative strength index. So this is an index to measure the strength of a stock. So stocks will go between 0 RSI and 100 RSI. Now below 20 RSI is considered oversold. Okay, and it's very weak. Now, above 80 RSI is considered overbought and very strong, but they can only remain in those overextended zones for so long. Okay, so we look for stocks that are above RSI to short, and we look for stocks that are below 20 RSI to get in long for a bottom bounce. So when we look at again, as I say, using this from a reversal point of view. So when we look at any of these stocks, here we can already okay. So just go back to the previous example. It's probably a good idea. Okay, so here we've already got a very overbought condition, right? Candles outside the Bollinger Band. It's in the overbought confirmation that we don't need that. Okay, so we've got that. Um, we don't need any additional confirmation. Okay, but it's helpful to put some of that information and get confirmation, if you will, in and use our scanners and signals in conjunction with the technical indicators. Okay, so if stocks that don't fit our criteria that we're looking for, let's look at the next example. Okay, so this one here, we've got, it looks like 6 or 7 green candles in a row here. All right, we've got 6 or 7 green candles in a row, and we don't get the doji. There's no doji. Okay, we get a full body candle, which is not the best candle to short because the stop is further away, and it doesn't have that same level of indecision that a doji has shown us. But in any case, we do get this red candle. Okay, now that comes in, and our RSI down here, our RSI right here is just breaking above the green 80 line. So the green line is for 80 and the red line is for 20. So 2080. Okay. Now, you can see we're pretty overextended. If we look at where the blue line that's tracking it, okay, we'll see that we're pretty overextended. And then right here on this one, we've got 4 or 5 green candles, a doji bar at the top. Okay, so we've got the Bollinger Bands, but the problem is it's at the top of the Bollinger Band, but not outside it. But we do start to reverse. Now, the RSI here is above the 80. Okay, it's above the 80 line. So we see that on the RSI indicator, it's very extended. Okay, now when you come back up for a second, here, it comes back up for a second try. Would you want to short here? Okay, getting a doji there. Okay, So it comes for a second. Up when it pops up again and beats that previous high. Would you want to short this second try? Well, I would say two things. One, I would say I only like to short the first move, which is this one, okay, and then short that pullback. Um, I don't like I don't like to short secondary moves. That's number one, okay. And number two, we're not as extended is the problem. Okay, so we're extended. We can get it. We're extended on the RSI here on this first move. We get the doji up here. We can see it's extended. It pulls down. We can get some profit there if we're shorting it. Okay, but it makes another run up. When we get up here, we can see it's not as extended. It's just not as extended down here. Okay, so this is visual to me, but from a technical standpoint, we're not riding the Bollinger Bands, and we're not overbought on the RSI. Okay, so that is an indicator that the likelihood of a top reversal is or a reliable top reversal in that situation here. Whilst you can see it does pull back, because we're not above the Bollinger Bands and the RSI is not above 80, it's not a good entry position. It's not giving me the signals to get in as a reversal, and we potentially have the likelihood of getting faked out. Okay. Now, this one. We've got these candles in a row. We can see, how many? All these candles in a row. Look, all these green candles in a row. We can see again that the Bollinger Bands, we're riding the top Bollinger Band. We get the first red candle to pull back now. This isn't a perfect example, but because we don't have a candle outside the Bollinger Band. Okay, but we do have this stop that's very extended. It's extended on the RSI. We get to here, it's peaking up at the 80 level. Okay, so on the RSI, it's peaking up at the 80 level, and we just start to pull back. So, in this case, it's not the perfect Bollinger Band example. It's not the perfect RSI example. So maybe we decide to go a little lighter, but it doesn't mean it's not a good setup for a reversal, right? This is an example of not wanting to have the technical indicators be, the red light, green light, because in this case, the technical indicator will probably say, well, we shouldn't short it. But in fact, this would have been a really good trade if we get in there and we get in at 86.97. That's our stop when it starts to pull back, and we can ride that down. It would have been a really good trade. We could have made a nice little profit on that one. So the combination of the RSI with the Bollinger Bands, for me, it can be a really good way of timing my reversal trades. Okay, and that's kind of my favorite combination of indicator. If I'm looking at indicators, that's a good combination of indicators. Of course, you're still looking for the patterns to form. You're still looking at the patterns to form for the reversals. But that's a good, for me, that's a good indication. Now, another indicator that I always have. So here we always have the volume. We always have the volume, the little volume histogram. Okay. On this one, I'm going to show on the DAS trader volume by price. Okay. I have this by default on all of my on my 1 minute and 5 minute chart, and this indicator is used to represent where other traders are transacting and what levels they're actually buying or selling at. So are they buying on the bid or are they buying on the ask? Okay, and where? So this is a good indicator for me on the, particularly if I'm trading the momentum strategy, or I'm trading the gap and go strategy. This just helps my decision making. I use it on my charts for confirmation that traders are watching key levels during a pattern setup. Okay, so what I'm looking for is we get a split between the green and orange on the chart, and I'll come to that in a second. We get a split between the green and the orange on the chart, and if I'm getting a large green, it's showing me that people are buying on the ask, and that's a very positive signal. Okay, so this on the left hand side of all my charts that I do is the volume by price. So here the volume, the full histogram here is the shares traded at this particular price. So you can see here there's two standout levels. We've got a standout level here that the shares are traded at around 32.25, and we've got standout level here at 38. Okay, 38.25 and 38. So it comes as no surprise to me that they are whole quarter and a whole dollar levels, which tend to be very psychological levels people buy at. But on this chart, what you're seeing here is that people are selling. So that they're hitting the so that they're hitting the ask, and they're it's on the making the transaction is taking place on the downtick. Okay, if we're getting on this one, the transaction is a lot more bullish because the transaction is taking place on the uptick. So we've got the down and then we've got the up. So that's the bid and the ask. Okay. So when we start looking at what we're transacting at, what are we hitting the bid or are we hitting the ask? The more we hit the bid, then it drives downwards pressure. So the more we hit here, this is reaching the top of the top of the range. So this is driving downwards pressure. Here, the more we're actually seeing it move up, this is driving upwards pressure. So this is telling me where people are holding bags as well. So this is where we're getting a lot of price action. This is where shares are being traded at these levels. So if I'm getting, let's say I'm getting a flat top setup and I'm seeing this volume by price coming in there, that's also corresponded by the volume we're getting here on the histogram at the bottom. That's a big indicator to me that that setup is going to break out where I expect it to break out. So I have volume, and as day traders, we're always chasing the volume, like I keep telling you. So we're always going where the volume's at, and we look for volume for confirmation, and we need the volume to come in order to break out of those patterns that we see falling. So we've got the volume histogram at the bottom, which actually tells us the number of shares being traded in any given time frame. And then I want the volume by price. So it's how many shares are traded at a given price. So that's two things that I'm looking for in volume, and it gives me an indication of whether when it's being traded at that price, whether it's on the bid or the ask. So again, it just helps as confirmation for me when I'm looking at entering those setups. Okay. Now, if you've got any more, it's only a short lesson today. So if you've got any more questions, or if there's something that you want to explore in more detail, drop me a line. Either leave a question or a comment on the lesson, or drop me a line at my email address. If you want to try out the charting with TradingView, just click on the link here. Benzinga for the scanners, and TradingView. Set yourself up with the free package on TradingView, and start tracking your trades there. You can do it in an Excel document by all means, but TradingView, there's a few others, but get yourself a membership with an account with TradingView. And start tracking your trades. The next one is our final lesson. You can go about your day trading life now with what I've told you. Go back and review the lessons. You've got the strategies. You know what I'm asking you to do. Implement a trading plan. Implement that growth plan for 3 months. You've got everything that you need now to be a successful day trader. Okay, you've got all of my day trading strategies available to you. I've given them all to you over the last 11 lessons. The next lesson, I'm just going to give you a little bit of extra. I'm going to give you a little bit more information on another potential strategy that you can use, which is options trading. I'm going to tell you a little bit more about options and why options is something that you should be aware of, and also that something that you can utilize with maybe once you become a profitable day trader, you can utilize some of those to maximize gains with an options trading and an option strategy. So I'll go over that in the next lesson. In the meantime, enjoy the rest of your day or evening, depending on when you're watching this video.